Welcome viewers to our class on income tax. My name is Untitled Chapter. I am the mentor and senior partner of TCS Global and Economic Advisory Services. I have worked more than 40 years in reputed multinationals and had the opportunity to handle taxation, finance, foreign trade, FEMA and corporate laws. Today's discussion on a specific subject on income tax. The theme of the discussion is caveat, 14 type of transactions that are tracked by the income tax department. I repeat, caveat, 14 type transactions that are tracked by the income tax department. The basic intention of this class is to explain you what are the informations that are already available to the income tax department in respect of various transactions, including cash transactions. So that is why we are going to explain each and every point, those 14 points, for the informations of the taxpayers, so that they can take care of those details and informations for the purpose of compiling their accounts and prepare the income tax return. The first point of discussion is basically the cash transactions. As you know, nowadays government is basically tracking all your transactions, whether cash or by debit card or by check, through PAN and Aadhaar card number. We have basically formulated 14 such cases where the taxpayer should be very careful and they can take care of those details for the purpose of compiling their financial accounts and preparing the income tax return. This is mainly because of the fact that your income tax return for the financial year 21-22 for the individuals are to be filed before 31st July 2022. Now, what are those 14 transactions and how the department gets those informations? Now, here I would like to tell you that these informations are basically furnished by the banks through whom you are doing various transactions, and these informations are passed on by the banks and other agencies from time to time through a specific form called SFT, Statement of Financial Transactions. Now, number one, that if you make any bank drafts or pay orders or banker's check exceeding rupees 10 lakhs and above, in other words, if the monetary value is 10 lakhs and above and you buy this bank drafts, P orders or banker's check from the bank by depositing cash, such information will be sent to the respective department of the income tax department, and that is intimated by SFT 1. That means cash transactions for buying bank drafts for a value of 10 lakhs and above by cash will be subject to the radar of the income tax department. Next, if you buy any prepaid instruments, prepaid instruments are those wherein you are giving the cash in advance, like smart cards, internet accounts, internet wallets, mobile wallets, paper voucher, and value is 10 lakhs and above, and that is paid by cash, then that information is also sent to the income tax department. By which format? It's called SFT 002. So these formats are all designed by the income tax department. And bank drafts are issued by whom? Banks. So banks are to provide these informations. Then most important area is cash deposits. See, government is trying to track all cash transactions. So if you deposit cash to your bank account, if it is a savings account, which is 10 lakhs and above, then that information is also going to the income tax department. Then any individual depositing cash in a savings account exceeding 10 lakhs and above, it will be reported to the department. Now, is it on account of one bank? Suppose if you have 5 different savings banks, is it 10 lakh, 10 lakh, 10 lakh? No. 10 lakhs as a whole for all the banks. If it exceeds 9,99,999, that means if the value is 10 lakhs and above, in respect of all cash deposits within the country in a year, then it will be intimated to the department. There is nothing wrong to deposit cash in a bank account, mind that. But you have to account for from where this money has come. Whether it has come from the legal sources or from the grey sources, government wants to know. So therefore, per se, depositing cash in a bank is nothing wrong in that, provided you have a strong supporting. So this is very, very important. Now, next intimation will go in respect of deposit of cash by the companies, by the organizations, by the associations, by the limited companies. They cannot have a savings account. They have to maintain current account. Is there any threshold limit? Yes, there is a threshold limit, and that limit is 50 lakhs and above. So, if the cash deposit of a company, of an organization, business entity is 50 lakhs and above in a current account, taking into account all current accounts in the country, then also it will come under the reporting. This is called cash deposits in an account other than current account, that is SFT 004, and SFT 003 is withdrawal from the current account, and if you withdraw the value is more than 50 lakhs and above, then in that case the cash withdrawal will also come within the information stage. So, SFT 003V is basically for withdrawal from current account of rupees 50 lakhs and above. It is applicable for organizations, establishments who are maintaining the current account, and SFT 004 is applicable for cash deposits in an account other than current account, that is individuals who are keeping the money with various savings accounts, and the value will be 10 lakhs and above, that is the threshold limit. If it exceeds, then only it will come under reporting. Next is the time deposit. Time deposit means fixed deposit. Here there is no cash element. You are doing a fixed deposit with your bank and the value is 10 lakhs and above, other than renewals. That means if you make a fixed deposit from your bank account with banks or any other institutions, and if the value is 10 lakhs and above, then the institution or the bank, they have to inform under SFT 005. That means you have to make sure that if you have done any fixed deposits, then that interest on fixed deposit has to be shown in the income tax return. Secondly, that fixed deposit has to be shown as investments in your books of accounts. Even if you are an individual and if you prepare a balance sheet, in that case that investment has to show in the asset side under the head investments. So that is why the department is basically wants to know from where this money has come for fixed deposits. Once they satisfied yes, it is from the normal bank sources, then they will see that whether interest accrued on that deposit or received in that deposit has been properly accounted for or not. So every information has a specific interest and target of the department. Now let us go to the next SFT. Now if you make any payment against credit card, you see credit cards are used very frequently nowadays. Now if the payment is made by cash 1 lakh and above, then it will be intimated to the department under SFT 0. That means if you pay any credit card bill by cash, the value of which is 1 lakh and above, it is coming for reporting. Similarly, if the total payment against credit cards exceeds rupees 10 lakh rupees in a year, that will also come for reporting. That 10 lakhs may not be cash, may be cash or by check or bank transfer. If the total payment against credit card is 10 lakhs and above, whether cash or check or any other mode, it will come for reporting. And if you pay by cash only 1 lakh rupees and above, then also it will come for reporting. So, this report will be sent by whom? By the bankers who settle your account. And what is the SFT? SFT number is 006. As I have explained to you, SFT is a mode of transmitting the information to the department. That is the format devised by the Reserve Bank and Income Tax Department. Next, if you receive any money or if you pay any money on share application, you know, lot of public issues are coming, right issues are coming, the HNI and other investors are putting their fund by paying share application money, and if the total share application money payment is 10 lakhs and above, maybe cash, maybe check, maybe pay order or anything like that, total payment exceeds 10 lakhs and above, then also it will come for compulsory reporting. What is the SFT number? The SFT number is 008, SFT 008. Next, if you buy any bonds or debentures, there are many ways you can invest money. You can put your money in share market, secondary market, primary market, we have already handled. But if you buy any debentures, bonds, which are issued normally by the big corporates, in those cases also, if the value is 10 lakhs and above, it will come under compulsory reporting. The same intention of the department. What is the intention? Whether this money has come from the genuine sources. Secondly, if it comes from the genuine sources, whether the corresponding interest has been considered in the income tax computations. They would like to ensure that both investments and your earnings are properly recorded in the books of accounts. And this is informed by SFT 007. So, debenture, bonds, SFT 007, share application money is 008. Next is the 009. You know, many companies come for buyback. Mostly the companies who have got a huge net worth, they have excess cash. They would like to buy back the shares from the shareholders. The reason is that they can deploy their excess cash by way of buying the shares. It will not be considered as dividend payment, and as a result, since it is not considered as a dividend payment, it will not be included in the income of the shareholder as income from other sources. And the company, by way of making payment, they are reducing the cash balance. So, these are the financial justifications, and it is perfectly allowed. But why department wants to know about the buyback? Because buyback will always be by check or by bank transfer, and it is done directly by the company and the shareholder. So, there is no iota of cash transactions. But why department wants to know? Department wants to know that if there is a buyback, then there must be capital gain income in the hands of the shareholder. So, suppose if I have some shares in say X account, X company, and they buy my shares, they will pay me. So, I have to pay the capital gain tax, because buyback is normally made by high net worth companies whose share value is much more than the face value of the company. So, in most of the cases there will be huge amount of capital gain, maybe long term capital gain, and department wants to get a pie of that. So, if the buyback informations are given to the department, then it is easier for them to track whether those shareholders who have gone for buyback of the shares, who have offered their shares to the company, whether they are showing the capital gain tax as payable under the income tax. Mind that there are 14 cases which we have referred here. In every area there is a link with your income. In every area it is linked with your assets, and it is for full transparency. So, buyback information, who will provide the information? Company who is buying back the shares. So, they have to file the information under SFT 009. Now, SFT 0010, very important, where a person receives money aggregating rupees 10 lakhs or more. What? In the form of units. That means when a person buys any mutual fund, you see mutual funds are always given in the form of the unit. So, whenever an individual or an assessee buys mutual fund and the value is more than 10 lakhs rupees and above, 10 lakhs and above, in that case the information will also be sent to the department. It may be cash, it may be check, it may be bank draft, it may be by way of pay order, anything. It is no way connected with the cash. If your total investment with the mutual fund in a year is more than 9,99,999, when you are investing in the fixed deposits beyond the threshold limit, it is coming for reporting. When you are investing in debentures, bonds normally issued by the corporate, you are under taxations. Now, when you are buying any mutual fund beyond the threshold limit, which we have already explained, then also it is coming for compulsory reporting. That means the department has got almost all financial details, major financial details, whether it is credit card, whether it is application for new shares, whether it is debentures purchase, whether it is a mutual fund purchase, all information are available. Next is that other areas, foreign currency. Government thought that many people buy foreign currency for foreign travel, and it was found that people are spending millions of dollars in foreign currency but not showing the right amount of income in their income tax return. So, before going for a foreign tour, we always use foreign currency. We may use our debit card we may use our credit card. Now through digital payments are all there. And if the total expenditure in foreign currency is 10 lakhs and above, then banks are to inform to the department under SFT 011. It is called sale of foreign currency aggregating to rupees 10 lakhs or more. This they would like to really track the travel part. But bank may sell foreign currency for many purposes, for remittance, for royalties, for again services, etc. But basic purpose is basically to track whether foreign currency which have been purchased from the bank, who is the seller of the foreign currency? Banks. Who is the buyer of the foreign currency? Banks. So they buy and sell, that is their profit. So through this system, the department would like to know whether the foreign currency, whether it is expenditure on income, are properly reported. And that is reported through SFT 011. Next is 012, SFT 012, it is for buying immovable property. You are buying immovable property and the value is 30 lakhs and above. The registrar, immediately after registration, they will intimate these informations to the department that such and such person with such and such permanent account number, with such and such Aadhaar number has purchased the immovable property located at Ato for a total valuation of rupees Ato. If department comes to know, they will have two advantages. One, they can track the seller to find out whether seller has shown it as a capital gain tax, either short term or long term. And they would also like to track the buyer. They would like to know from where the buyer has paid the money. Is it from other sources or it is from the genuine bank balance? So both buyer and sellers will be tracked. Sellers will be tracked for the capital gain tax which government is eligible to get, and buyer will also be tracked to find out how the money has been transferred, from where, which bank account, and whether he has paid from his own fund or not. Who furnishes these above informations? By the registrar who is registering your property. They will intimate to the department that any sale which is 30 lakhs and above will be compulsorily reported to the department. So this is intimated to the department under SFT 012. SFT 012, very informations. And SFT 013 is basically cash payments for goods and services. Always try to say no to cash. It is not only for income tax, it is also for GST. But I am not discussing the GST part. So government would like to track if there are any cash payments. So in the cash payments, there are two factors. Those who are giving the money, whether they are paying from their disclosed income, and those who are receiving the money, whether they are showing that money as a receipt or income in their books. So therefore, cash transactions, these 14 type of transactions which we have referred now, these are combination of transactions, a part of which cash transactions and another part of which are transactions, maybe cash, maybe check, maybe banks, maybe any other mode of payment. So these 14 type of transactions are tracked by the department. So as a good citizen, your job is basically to see that all these informations which are compiled by the department are properly reflected in your books of accounts and in your income tax return. So annual information statement is very important. So whenever you go for filing income tax return, I am talking about the individual, because they are to file the return within few days, they must get two statements from your income tax account. Number one, 26As, wherein you will see your other income, TDS, etc. And second is that annual information statement. So annual information statement, all these informations will be available. Department informs you, yes, these are the information I have already have. Please be careful. That is why we have named this particular deliberation as caveat. That means be aware that 14 type of transactions are being tracked by the department. So as a good corporate citizen, as a good individual citizen, we would always try to comply all rules and regulations of the country, and we have to be a compliant citizen of the country, and hence these deliberations. Friends, if you like these deliberations, I have 3 requests. Please like it, please share it, and please subscribe it. This is an education channel wherein we will be regularly uploading videos on taxation, both direct and indirect, FEMA, foreign trade policy, insurance management, and corporate laws. If you subscribe this particular channel, hopefully you will always be updated with the recent informations, recent circular, recent notifications, and also certain advice to the citizens about compliances. Thank you very much for your patient hearing. Thank you.